Hey guys, Ray Campbell. It is Friday, August 16th. I wanted to give you a quick market update. We're going to talk about a couple of things here. Current rates as of yesterday, of course, what we're seeing there, some market indicators and reports that came out this week, and kind of what to look forward to here coming up soon, and a couple of updates as well on the NAR settlement and the buyer agent commission. There's some new developments a little bit on the lending side with that, so that's going to come towards the right after the quick update on market. So right now we're seeing this week interest rates as of yesterday. The national average locked about 6.510. You can find that on Optimal Blue mortgage market indices. By the way, if you just Google that, you can find that. It's what we use on a daily basis to make sure that we're within market on our interest rates. So keep in mind, it doesn't account for how many points people are getting paying. It doesn't take into there are some charts that you can use to look at different credit scores and stuff, but those numbers that you see on there are, if you just generalize them, that's basically what you're going to find. It's kind of a generalized number. It doesn't take into account, any borrower specific information or structure or how they want to do it. We are still seeing about 1 to 1.5% on discount points when we're looking at, different lenders, rate quotes when we're seeing those. So that's what we're seeing for interest rates. We did tick up a little bit here, towards the middle of the week here. It's market movement. It's gonna happen. We don't move in a straight line. So interest rates did tick up a little bit, and then started to come back down, and we're basically flat on the week essentially, to a little bit better than where we started, because we did have a sell-off, of course, in the beginning of last week. So interest rates, of course, mid sixes are a good thing. You can see in interest rates fluctuating anywhere from, the mid 7% range all the way down into the fives even, without, buying down versus buying down significantly, that kind of deal. So next thing to touch on for you is going to be the quick update for you on the NAR settlement. So something we talked about earlier in our company call was a couple of changes that are happening. So we did get some clarification, and of course, hopefully this doesn't happen and borrowers aren't in a position that they need to, but should the borrower need to pay the real estate agent commission, the buyer agent commission on conforming Fannie Mae, Freddie Mac loans, up to 2% of the loan amount, basically, they can use a credit card. So, that's not a great situation to be in. We don't want them to have to put any money on a credit card, go into debt to be able to buy the house or anything. But if it's a weird situation that the borrower finds themselves in, you find yourself in negotiating and whatever, that is possibly an option. But that's there. The biggest change that we're seeing is, while VA did change their stance on the borrower being able to pay for the buyer agent commission, they did announce a temporary pause to that rule that they cannot. So the veteran, can pay the buyer agent commission on a VA loan. There is some clarification though. There's some direct specific verbiage. So just something for you to be aware of when lenders start asking on a VA loan. The VA is requesting and requiring for the appraisal a copy of the buyer broker agreement, so your commission agreement with the buyer that is signed, to be part of the appraisal order. So when you start seeing that, when you have a veteran that you're helping purchase a home, expect to have that condition from the lender, that they're going to require you to provide that document. It's not something that's random that, why are they asking for this? It is new, but it's not just a random thing that they're asking for. Like, who cares? Why do you have it? We don't get into the why of a lot of these things. We just kind of follow the rules, right? So keep that in mind when you're helping out the veterans. Long-term outlook on, market conditions and interest rates, that everybody's waiting for the September Fed meeting to see interest rates come down. So mixed feelings on how that's going to work exactly. Keep in mind, my thought process anyway, and I've spoken to a number of different people on this, is that the Fed is going to be supposedly going to be cutting a quarter, maybe even 50. Some are even saying 75 basis points, or 0.75 or 0.25 in September at their meeting. However, that does not directly reduce interest rates. The things that they're doing and the economy and inflation reports, all of them coming out better than expected this week, those things are reducing interest rates, mortgage rates, okay? But the cut itself in September is not going to necessarily cause that to drop significantly in September. We should see them continue to get better from now to then, and then maybe a little bit more, but it's not something that's all of a sudden where we're going to get a 0.5% decrease or something like that. It might happen that way, but not necessarily exactly how it works historically anyway. Now, what we can expect is that we've already seen it, right? We've seen part of it, if not most of it, maybe half of it. We'll see what that ends up being. But that's why you're seeing rates in the mid sixes now, high sixes even, where you're not buying down discount points. Rates came down 0.5% real quick once after the Fed meeting, this last Fed meeting, and then 2 days after, the 2 days following, we got reports out that the inflation numbers were better, and that's what everybody was saying basically it's a lock. September, these things are going to happen, and what's going to continue through there. So as a trader, knowing that information, a lot of traders are going to get ahead of what's going to happen come September. So we could have seen some significant decrease in interest rates ahead of what's coming in September. So then the move in September may not be as big as everyone's hoping it is. So I really hope that it is, and that all happens and we get another big drop in interest rates. That would be great. Where we're expecting, rates to be down into maybe the low sixes by the end of the year. Mid fives, low fives, maybe by the end of 2025. That's some of the conversation that's going on, but who knows? It's like the crystal ball. I don't know what's going to happen tomorrow, right? So we'll have to see how that all plays out. But the current conversations we're all having, that's what we're seeing. Everybody kind of maybe putting on hold a little bit, thinking September these things are going to happen, but we've already seen a good part of that. So it might be a good piece of information to get out there and help your buyers and sellers understand kind of what's coming and what's already happened. So if you guys have any questions or need anything over the weekend, of course, feel free to give us a call. You can call me or call my team. You should have that information. If not, it's going to be in one of the links here as well. Hope you guys have a great, productive weekend, and we'll talk to you again next week. Bye, guys.